Hi, I'm Jeff Banks, the founder of Banks Consultancy, not your ordinary accountants, and these are our tidbits of the day. And today I want to talk to you about the difference between a capital gain and a revenue gain. Now, I get a lot of clients with the misconception that capital gains tax is extra tax. Nothing could be further from the truth. In fact, you actually want a receipt to be dealt with as a capital receipt because the taxation position on that revenue is actually less than normal taxation positions. I hear a lot of questions out there, but if you think about it, I buy a property for $100,000, I sell it 2 years later for $200,000. How much do I pay tax on? I don't pay tax on the $100,000 profit. I only pay tax on $50,000. Does that sound like I'm paying tax on the whole gain that I made? Absolutely not. But if I was in the business of buying and selling properties, then I would pay tax on $100,000. Now, if I'm paying tax at my top marginal rate, that's $49,000 versus half of $49,000, $24,500. Makes a big difference. When it comes to looking at whether something is a capital gain or a revenue gain, it's obviously more advantageous for us to show things as capital profits as opposed to revenue profits. We just need to make sure that that agrees to the story behind the transactions. If you need any help with any of this sort of stuff, this is quite technical and we need to make sure that we get it right before we lodge a tax return. In fact, it's probably even better to start talking about these sorts of transactions before we enter into the first one to make sure that the best possible outcome is where we end up. My trained staff are always on hand to help with these sorts of things. And if you need to, info@banksconsultancy.com is certainly one of the email addresses that you should have plugged into your address book in your Outlook so that if you get a question, you instantly shot us off a question and we'll attempt to answer it as soon as possible. I'm Jeff Banks from Banks Consultancy and we are not your ordinary accountants.